I just got done watching Austin FC, and to be honest, it's always a hard watch. It's kind of just like the standard now. We have next season, hopefully with a new coach, but no biggie, you have to rep your home team for sure. Verde hasta la muerte. But with that being said, my name is Gael Meza. I'm a real estate agent here in Austin, Texas. If we haven't met yet, most likely we haven't, considering this is my very first YouTube video. I love all things real estate, but more than anything, I really just like teaching people and making sure it's known that you can buy a home. Yeah, you can buy a home a lot sooner than you would think. Just some context of myself, a little bit of my story. My mom and we've been renting for around 18 years since I was born, basically. We've never owned a home here in the US. My mom, she came here. She was born in Mexico. And when she came here, she had nothing. Four boys to look after and a job at Jack in the Box. She learned English as soon as possible so that she could not just live, but survive. And then I've made it my mission to really make sure that if I ever encounter somebody in that same situation, I want to be of some use. Looking back now that I'm a lot more into real estate, it's made me realize all of the missed chances that we had growing up. A lot of the different ways that you can buy a home. You don't need 100 grand as a down payment. You don't need a perfect score. If you have a decent score, if you're not very cash heavy, if you've been employed for the last 2 years, you can most likely buy a home. And today, that will be the topic. The topic will be the FHA loan, which is a very, very popular loan for those that don't have an excellent score, like an 800 or something like that. Also, sorry about my phone going off. But yeah, for those that don't have like an excellent score, for those that don't have 100 grand just in the bank chilling, if you do, congratulations, that's quite the achievement. And yeah, that is what I will be going over. I will touch base on every important aspect of the FHA loan. Let's get to it. So first, let's just go ahead and break down what the FHA loan actually is. So the FHA loan was made around like mid 1900s or so. And this was during a time where the housing market was just absolutely terrible. Like people would have to put down 50% down payments just to take out a loan on a home. The housing market was in a terrible state during those times. So what the government did to sort of boost the housing market was simply make a loan that was backed by the government itself. FHA stands for the Federal Housing Administration, the specific part of the government or department that backs that loan. So although the FHA loan is very flexible, as I mentioned in the intro already, you can get an FHA loan if you're not very cash heavy, if you don't have an excellent score, or if you've been employed at least 2 years or so. There are also consequences that come with being able to get a loan out this cheap. In this video, I'm going to not just sell you on the FHA loan. I don't believe in selling that. I believe in people making informed choices by watching well-researched content. I maybe haven't been in the business for very long, if I'm being completely honest. I just started, but I do have a good knowledge of real estate and the tools that are available to people so that they can buy homes, one of which is the FHA loan. This will be a completely non-biased video of me going over the pros and cons of the FHA loan. And yeah, that was just like a very quick history lesson, just to why the FHA loan exists in the very first place. Let's get down to the benefits, start off with the good stuff and leave the best for last. So we went through the main amazing parts of the FHA loan, which is boom, don't need 100 grand. And then boom, you don't need an amazing score. The FHA loan is that it allows for the seller to put forth 6% of the purchase price towards closing costs, which means usually when you close on an actual property, it's not just a down payment that you have to make sure you have when the closing is taking place. You have to take into account closing costs, which could include mortgage fees. Most of the time they're rolled into the loan itself, but there are some upfront fees. You could worry about inspection fees or whatever it is that you're in charge of as the buyer. So what this allows for is for the seller to completely cover your closing costs. This can make it so instead of having to bring forth 50 grand on a home that's worth like $500,000, you would just have to bring your down payment, which is just 3.5 of that purchase price, which is just $18,000. Now, 50 grand is like an estimation, but people like to recommend that you bring or that you prepare for 2 to 4% of the purchase price as just closing costs and fees and stuff that may come up during the transaction itself. This allows for you to prepare for those same things, right? But maybe instead of 50 grand, you just have to bring like 20 grand, 18 grand. So yeah, that's a really cool part. Now, also, this does depend a lot on the real estate agent that you go with. For example, myself, I would fight for closing costs in every single transaction. You could use those funds for so many things and save you a ton of money in the long run. So now let's go to the biggest downside of the FHA loan, which is the private mortgage insurance. Now, I'm sure you've thought, okay, well, what's the catch? This right here would be like about as big of a catch as it could possibly be. So obviously, the FHA loan allows for you to get lent a large amount of money with very little upfront cost compared to, for example, if you went conventional. If you went conventional, usually you would start off like at around 10 all the way to 15, most likely around the 20% range for the down payment. So what private mortgage insurance is it is a way for the lender to protect themselves in case of a buyer default. You know, although it is a loan that's backed by a government agency, it is still very risky to give somebody a loan of like $450,000 with just an $18,000 down payment. So this is just essentially a way for the lender to recoup their losses in case of a buyer default. However, there are good news. PMI can go away. There are several ways around it. The two ways that you pay PMI would be: one, you pay a upfront cost. This is mandatory. I believe it's around like 1.75% of the purchase price. And then second is it's rolled into your PITI. PITI is basically what you're paying yearly or monthly for your house. This includes your principal, your interest, your taxes, and your insurance. Your PMI is rolled into that PITI payment, which of course makes it more expensive to own that home monthly. However, there are plenty of cases out there where, for example, if you buy a house in a part of a state that's rapidly growing, for example, here in Austin, if you buy a house like in Round Rock, or maybe even more up north towards Georgetown, or maybe Bastrop, or maybe Manor, or maybe Kauai, those places, believe it or not, are rapidly growing. If you buy a house there, it might take a little while longer, but eventually it will appreciate. And when your house starts to appreciate past what you owe, it builds you equity. Now with PMI, to get rid of it, the main way or the most traveled road would be to get 20% of equity in your home. This means that you own that amount of your actual home. This is very important because this is usually the best way to get rid of PMI. However, there are several ways to go around it. If your house appreciates, like let's say in 2 years, about like 5 to 10% each, by year 3, you can just call up the bank and then refinance that into a conventional loan, and boom, PMI is gone. Another way as well is you can do extra monthly payments that go straight to the principal. This is the best way to build equity just on your own. Like, this is the best possible thing that you could do monthly to build equity, is just pay direct principal balances, because this directly builds you equity. Instead, you just build up that equity to 20% and you refinance out and turn your FHA loan into a conventional loan. Now, that is just one of the ways to get out of PMI, PMI being the biggest downside to FHA. Another downside as well is you can't just use the FHA loan with any property. It has to be owner occupied. The property definitely has to be owner occupied, as well as follow very strict guidelines. Because the guidelines are very strict, there have to be specific inspectors. Specific inspections have to take place, and what this does is just extend the closing time longer. If you're well prepared, it could take from like 1 month, but with FHA loan, you know, things happen. So definitely prepare for more than 1 month, maybe 2 months, at the most 3 months. If it takes longer than 3 months to close on a property, usually a red flag. So by strict guidelines, I mean the property can have something as minor as peeling paint, or not necessarily a whacked out roof, but you can definitely tell it's aging. It could use some fixes here and there. What happens is FHA is very dramatic. Like if you have a small issue that can be replaced in the roof, FHA will make you replace the whole roof. That is why it takes longer, and that is also sometimes frowned upon when taking an offer into account. Usually with FHA, you probably have to go above purchase price. Of course, this all depends on your real estate agent, but people that go conventional just have like a more competitive price because there's just less hassle, to be completely straightforward. If you're a seller, you'll want to go with a conventional loan than an FHA loan because, you know, you won't have to deal with like very nitpicky inspectors. You won't have to deal with long time frames. But if you find that one house that maybe has been on the market for a while, or if you just have an insane agent that gets every offer approved, you know, that don't even worry about what I'm saying right now. Although these guidelines are very, very strict, they're also meant to protect you. Pretty nice. So, is the FHA loan a good choice? That really depends on your situation. If you fall under the 3 things that I described at the start of this video, for example, lower credit score, you need maybe help with a down payment, or if you're not very cash heavy for the down payment itself, the FHA loan can get you into a home. Will there be downsides? Of course there will be downsides. There's no such thing as perfect things in this world. You and I both know that very well. I think it's a great option, and it just makes buying houses a lot more accessible to people. Will you buy your first home, which is called your starter home, that will help you get into your dream home in the long run with an FHA loan? Definitely, for sure. However, if you're able to save up for a larger down payment, if you're able to save up at least 10% and have good credit, I'm talking like above 700, 720, 730 or so, a conventional loan will be a better option in the long run. Especially if you want to just not even worry about PMI. Those like $100, $200, $300 sometimes. I've actually seen PMI go up to like 500 on example loan. But yeah, if you have the option to save up for a higher down payment and you have really good credit, definitely save up for that conventional loan. If not, if you're just like a lot of people out there that are trying to find a home and are anxious that if they don't get into the market now, they'll never buy a home in general, go FHA. FHA is one of the best loans. It's one of the most well-known loans. Every agent, every lender knows how to work with an FHA loan. But yeah, if you're thinking about buying a home, if you want me to help you sell your home, please feel free to reach out. Please, I explain why at the start of the video. I'm very passionate about helping people solve their real estate problems. Because growing up, I didn't have somebody that could speak to myself or my family. And, you know, it's my mission to help people out as far as real estate goes. Do I like those commission checks? I love them. Who doesn't love money? But like I said, I definitely love my job a lot more, and I do it for free. If I were the richest man in the world, I'd do my job for free. But yeah, next week I do have an investment topic planned. I think I might do investment regarding FHA since we're fresh off FHA. Might as well just do like an extensive run through of it. As far as investment goes, I'll be doing a couple of examples. Please comment what you thought about my very first YouTube video. Is my voice too monotone? Is it boring information? Am I too cheesy? Am I too cocky? Do I sound like a child? I probably do. I mean, I'm 19, so I'm not a child, but I probably sound like one. And yeah, again, my contact info will be in the description. If you want to have a chat, we can talk about soccer. We can talk about real estate. We can talk about investment. We can talk about, I don't know, if you want me to help you find out what you want to eat for like lunch or something, I'll gladly help you out. Please subscribe, please like this video and hit the bell so you'll be one of the first to see my videos in the future. Thank you guys. Have a very nice night. So I'm gonna make sure to edit this, post this on YouTube. Tomorrow I'll post this on my socials as well. And yeah, I'm gonna get a good night's rest. But with that being said, I hope you guys have an amazing night. Sweet dreams. Do not let the bed bugs bite. Bed bugs stay forever. If you have bed bugs, please consider trying to get that inspected and maybe get like an exterminator or something, because those guys like to linger and stay around for a while. They get on your backpack before you know it, you've caused an infestation. COVID 2.0. But yeah, thank you guys.